Saylor net positive or net negative? Also, the rest of the Treasury companies.
No, man, this is my controversial take. I fear that we're going to start to see.
Is there anything that scares you in Bitcoin right now?
The psychology of totalitarianism. Each cycle, we're losing some of these OGs. The people that have actually been in Bitcoin the longest disappear. And so who are the voices at the front of Bitcoin? So you've got this really skewed thing where you're kind of passing stuff on from the people that actually least understand Bitcoin in many ways. And so I think this is why Bitcoin is changing each cycle. But I am seeing a lot of like institutionalization, and I just hope that it doesn't compromise from a code perspective.
Boy, yeah, I could not. Today, I'm joined by someone who understands money, not just as currency, but as the psychological operating system of society, author of The Hidden Cost of Money, and B is for Bitcoin, educator and co-founder of Looking Glass Education, Mr. Seb Bunny. Seb's work cuts deep into how incentives shape behavior, how inflationary fiat currencies warp our culture, and why Bitcoin represents the good that can eventually come from all of this. But before we get into the philosophy and the things that you and I love talking about, Seb, we need to talk about some of the things that are going on right now, because we have some coordinated attacks going on from all angles in the Bitcoin industry. New York Times hit pieces, JP Morgan attacking MicroStrategy, Bitcoin, then rolling out its own products, just chaos everywhere, ETF inflows, ETF outflows, forced liquidations, full-blown media blitzes. It really is crazy what's going on right now. Gold and silver are ripping while Bitcoin dips. Where are we, Seb? Let's start right here. What is happening right now? What is your take on everything that's going on? It's great to have you here today, but we are in a wild time. As everyone thought there'd be a retail euphoria right now, it's anything but that. So it's great to have you, and can't wait to hear what you have to say.
In terms of how I'm looking at the market right now, I would say that I think there's a few factors at play right now. First off, at just a very base level, Bitcoin's functionality hasn't changed. One Bitcoin is still equal to one Bitcoin. Yeah. There's still going to only be 21 million Bitcoin. And each block just continues to tick along every kind of 10 minutes or so. And so when I look at actual Bitcoin's functionality, there's nothing that has changed. And so my opinion on Bitcoin has not changed. You know, when I used to come from, I used to trade in the financial markets for kind of over a decade. And I used to be a big kind of Warren Buffett value investor. Mm-hmm. And one of the things that he would always say is like, what you want to do is you want to find like a value company that is creating immense amounts of, when I say capital, I'm not talking necessarily just about money, but they're creating products and services that are like supporting society. And something in the external world has created a negative view that has caused the price to collapse, but its fundamentals are still intact. The company is still doing what it's doing. It continues to produce products and services, but it's impacted it on a financial basis. And so I think that the way I look at Bitcoin right now is you've got this, as you mentioned, a bit more of like a concerted attack. You see it coming from a lot of the banks, a lot of like the individuals, Steve Hank and Peter Schiff.
Oh, Schiff.
Like you're seeing a whole bunch of people that are kind of just like jumping on and kind of they're on the bandwagon attacking Bitcoin. But I tend to take a step back and ask, like, why could this price be going down? What is causing this? And these aren't my theories, but I would say that there's two things that I think are happening. First off, when you actually look at the on-chain analytics, and I know Checkmatey talks about this a lot, and it's this idea that if you actually look at who is selling, a lot of it is OGs, like people that have been in Bitcoin for a long time. And you could ask, well, have they given up on Bitcoin? Why are they selling? And I would say that you got to put yourself in their shoes. If you bought into Bitcoin when Bitcoin was trading at $10, $100, even sub $1,000, you put in $25,000, $50,000, a decent chunk of your savings. And all of a sudden, this money is now worth millions and millions and millions of dollars. From that perspective, Bitcoin, from where they came from to where it is now, you're having nation state adoption. You're having institutional adoption. Like this is in many ways achieved far more than they could probably ever have imagined. And so if you've got $50 million worth of Bitcoin, if I was in their position, I would be, well, Bitcoin is not the end. Bitcoin is not the goal. I don't just want to own Bitcoin for the sake of owning Bitcoin. I want to own Bitcoin because I really want to be able to show up in life more wholeheartedly. I want to be able to direct my energy towards the things I'm passionate about. I want to direct my energy towards my family, maybe other potential entrepreneurial pursuits. And so it would not faze me in the slightest to maybe sell 10, 20, 30% of your position to go and buy a ranch so you could spend more time on the land, to spend more time with family. And so I think a lot of these individuals are essentially just recognizing that well, they're not just going to hold Bitcoin indefinitely. They still want to be able to improve their livelihoods. And so then maybe they're selling off like a portion of their position. And it's not because they've given up on Bitcoin or Bitcoin no longer does what it used to do. And so that's kind of the way that I'm looking at it. And the on-chain analytics, from my understanding, unless it's changed in the last couple of days, because I haven't really checked, tend to support that theory because a lot of the flows are from old coins as opposed to newer institutional players. So I personally am not necessarily worried. If anything, I'm looking at this from the perspective that we have had a drawdown, a significant drawdown from its highs, and it feels like it should mean revert. And so I find it really interesting. I'm buying here.
There's so much back and forth right now with people think, and again, you talk about this in your book, which is such a phenomenal book, and that we'll obviously link to this in the description below. People have to check out this because it goes back to money. You talk a lot about money being psychological, and it's a psychological engine, and it is. And so, do you think that part of it is the price is down because people think there's chaos when there's not? So I would love for you to kind of expand on just the sentiment and the price, and kind of in the psychology and how those kind of work together.
I think that value is a story. Value is absolutely subjective. It is in the eye of the beholder. And so I'll frame it by saying, if someone gave you like a down jacket, a big fluffy like down jacket, if you had that down jacket in the Arctic, that down jacket is incredibly valuable to you. If you have that same down jacket and you're in the Sahara, that down jacket doesn't have much value. And so value is in the eye of the beholder. And so I think that a lot of people are just saying, oh, well, gold has intrinsic value. Nothing has intrinsic value. If someone is worth $1 billion and they're stranded on a desert island and they're starving, ultimately, does gold have value to them? No, it doesn't have value to them because it doesn't provide for their needs. And so I think that everything has value because of the subjective desires of an individual. And so Bitcoin has value to, say, someone who is living under authoritarian regime because their currency is being devalued and they can't show up for their family, and all of a sudden they're being offered something that has a finite supply. They can transact in a peer-to-peer manner without the need for intermediaries. That is why Bitcoin has value to these individuals. But if you're a billionaire, you work for one of these hedge funds, and you are benefiting immensely from government subsidies, government stepping in, maybe regulation, you're able to lobby to get certain bills pushed through that are going to benefit your balance sheet. Ultimately, you look at Bitcoin and you're like, well, I can't really control Bitcoin. I can't really invest in Bitcoin in a way that I can manipulate it so that I can benefit immeasurably above and beyond other people. So maybe it doesn't benefit me in the way that I need. So I'm going to continue doing what I'm doing. So I think that it is no wonder that we have this concerted attack, because people that tend to be attacking this thing benefit from the existing system. So in their eyes, Bitcoin doesn't have value. But I think for anybody who is existing in this world today that is struggling with rising prices, house prices are skyrocketing, food prices are skyrocketing, they feel as if the government is increasingly putting pressure on them as individuals. We're seeing bank accounts being frozen. We're seeing people in the UK being silenced from free speech, put in prison. I think having a monetary system that is separate from state, that allows you to transact permissionlessly, trustlessly, I think is something that provides immense value. But again, it's in the eye of the beholder. And so people that don't understand Bitcoin, they're looking at it from the perspective, oh my God, all of these other people think that it's worthless. Maybe it is worthless, but it's simply because they don't understand it. And so I think that if we are getting any selling pressure from individuals because of their lack of conviction, I don't necessarily think it's because of validity. I think that it is simply because of social conformity, and they don't understand this thing that they're investing in.
Generational wealth doesn't happen by accident. Bitcoin fixed the money, but it didn't fix the system of protecting and passing it on. Bitcoiners, we have to live in two different worlds, idealism versus pragmatism. That's where Meanwhile comes in. It's the world's first Bitcoin-denominated life insurance company, regulated in Bermuda and built entirely by Bitcoiners for Bitcoiners. With Meanwhile, long-term holders can grow and protect their Bitcoin wealth through tax-free policy loans, no repayment obligation, no margin call risk, while making inheritance simple and secure and entirely in Bitcoin. It's about sovereignty, stewardship, and building a legacy that lasts centuries. Because if Bitcoin is forever, your plan should be too. Learn more and sign up with code 4QPBWC at meanwhile.bm. That's meanwhile.bm, code 4QPBWC, or just sign up in the link in the description below. All right, real talk for a second. We all know health insurance is basically a fiat system of healthcare. The biggest debauchery there is. It's expensive, confusing. Somehow you still end up paying hundreds of dollars for a Band-Aid. We moved to crowd sharing almost 5 years ago. It's the best decision we ever made. Instead of sending your money to the insurance company's black hole, you join a like-minded community that directly funds each other's medical bills. Simple, transparent, way cheaper. And that difference you save, you can invest in Bitcoin. It's an amazing win-win. And look, we're part of the Bitcoin community because we believe in freedom, decentralization. Crowd Health brings that same mindset to healthcare. You choose your doctor, you pay in cash, and the community's got your back when the big bills hit. No networks, no middlemen, no bureaucrats trying to approve your care, just people helping people the way it should be. You make decisions about your health. That's as sovereign as it gets. So if you're ready to take the orange pill for your health, this open enrollment, go to Join Crowd Health to get started for $99 for your first 3 months using code Brandon at joincrowdhealth.com. That's joincrowdhealth.com, code Brandon. Crowd Health is not insurance. Opt out. Take your power back. This is how we win.
Are you concerned at all? Because like, I feel like there's a lot of Bitcoiners, to your point, like when people don't understand something, price is shaking them out and in a way, like they're FOMOing in and they're getting shaken out when it dips 10% or 20% or 30%. And they're not understanding what they own in this new monetary system that's outside of everything that's controlled over here. And to George's point, that he's kind of right in that sense of like, still today we have AI, we have all these things to be able to understand Bitcoin. And yet there's still such a small portion of society that understands what Bitcoin really is. You know, whether it's now or in the future, is there any concern in your eyes? Because the old system is going to fight it. And I think that's what, again, a lot of Bitcoiners think like, Trump got in, we're accepting Bitcoin. Yay. Like the world is saved. And look, you know, here we are. And not much has changed, if anything at all. It's going to be a bottom up revolution. I mean, what is your concern level, I guess, just on the arc of time here of people understanding this?
You know what? There's a famous quote that I just brought up here as you're saying this, which is, it's again, a Warren Buffett quote, but he says, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. And I think that in the short run, price is a reflection of people's fear, people panicking, a lot of FOMO. Basically, it's just psychology driving the market. In the long term, it's a weighing machine. Like, what value does Bitcoin actually bring to the market? And I think this is really important to kind of share this, because I think in my mind, Bitcoin's volatility, people tend to think, oh, Bitcoin's price is fluctuating. This is a symptom of Bitcoin. In reality, what it's actually highlighting is it's a symptom of the denominator, which Bitcoin, the denominator is the dollar. Bitcoin is priced in the dollar. The reason why Bitcoin is fluctuating is because we have a central bank, we have a handful of individuals. Ultimately, we have one individual, Jay Powell, standing at the top and saying, hey, we're going to cut interest rates. Oh my God, capital is easing, money floods into Bitcoin. Hey, we're going to raise interest rates. Oh my God, capital is tightening. Oh, money floods back out of Bitcoin. And so this Bitcoin's volatility in many ways, when you step back, is a product of the underlying denominator. And so some people struggle to grok that. And there was this book that I read a little while back. It talks about how gold, before, when the currency was pegged to gold was far more stable. Since the currency left the gold standard, gold has been far more volatile. Again, that's not highlighting that gold is a volatile asset. What it's highlighting is that the underlying currency is far more volatile. And so I think that's where some people just need to like reframe how they think about this price action and just continue to ask the question, like, has Bitcoin like fundamentally changed in its functionality? Has the narrative of the story changed in Bitcoin? And I would argue, no, it hasn't. Like this year, nothing has changed. If anything, I'd be even more bullish just because Bitcoin, we are seeing greater adoption, and we're seeing some incredible individuals talking about Bitcoin. And I think we're seeing amazing development on Bitcoin. And so from that respect, I think Bitcoin is continuing to do what it is doing.
What are your thoughts on the 4-year cycle? And that's where there's a ton, obviously, of back and forth right now with the 4-year cycle is dead. No, it's here, you know, going back and forth. So what are your thoughts on the 3 green candles, 1 red, or is it 2 green, 1 red? You know, what do you see when you look across the horizon here?
I would say that people from a psychological lens like to paint the world as black and white. They love to be able to say this is moving because of this. And I think the world is a lot more complex than that. And so I would like to say, yeah, we've been having 4-year cycles because of the halving cycle and because of just the way Bitcoin has kind of, the code is written in Bitcoin. However, when you actually just step back, you could also argue that the reason why we've had the 4-year price movement is because of it's aligned with the political system. And you've got a 4-year electoral system where you've got the president voted in, you've got the midterms, you've got capital flowing. And so you could also argue, well, maybe it wasn't moving because of the halving cycle, it was moving because of something else. And so ultimately, what I would say is that there's multiple factors. The supply, the actual physical act of the halving, cutting the amount of supply while demand stays constant or even increasing, is always going to increase price. However, you've also got easing and tightening liquidity positions and such. And so I would say that what happens moving forward, I lean towards saying that I think that we're going to move away from this 4-year cycle that we have been kind of seeing or being able to somewhat track. Each 4 years, it has been lengthening somewhat, but I think that's also been a function of the liquidity positions. And I feel like given that we're going into US midterms, you tend to get easing into midterms. And given the position in the market right now where we're seeing gold rip, I think people are starting to increasingly feel unsteady about the stability of the economy. I tend to feel like it wouldn't surprise me if this 4-year cycle model kind of completely breaks and we start to move on up again. And now I would also argue that, like, in the financial market, you've got something called like max pain. Some people listening to this probably know about max pain, but it tends to be that if the majority of market align in one direction, well, max pain is probably going to pay out whereby price moves in the direction which is going to cause the most amount of pain to the participants. And so if people think that we've got this 4-year cycle and they think the price is going to go down, well, what do? We start to get people taking short positions to try and capitalize on that down movement. Well, if you have a whole bunch of people taking short positions and then Bitcoin's price starts to move back on up, what ends up happening? All of those people that have taken short positions now have to start covering their position. And by covering their position, they're going to start buying back into the market, which then further amplifies, it creates a kind of self-fulfilling prophecy, and max pain plays out. Everyone kind of struggles because everyone's kind of predominantly lined short. And so it wouldn't surprise me at all if we were to kind of break this 4-year cycle. But in the end, it's probabilities. It could do, it may not.
Yeah, it's fascinating. I mean, obviously, JP Morgan is such a central node in the legacy fiat debt-based system, and they're making waves. And it's Jamie Dimon for 10 years, telling everyone fudding Bitcoin, and then obviously in behind the scenes, they're constantly doing the opposite of that. And then here we are again. What are the incentives of some of these entities like a JP Morgan, one of the biggest nodes in that legacy system?
Oh man, I wholeheartedly agree. Right now, there's a scene in The Big Short that I feel like is playing out. And that scene is when Michael Burry has taken out all of these credit default swaps. And he's bought all these credit default swaps through these varying banks, one of them being Goldman Sachs. And at the time, the housing market in a kind of, I think it's third quarter 2007, first quarter 2008, starts to collapse. Well, he's got these credit default swaps. Basically, for people that aren't familiar with a credit default swap, he's basically got an insurance policy on the collapse of the housing market. So the housing market starts to collapse. And instead of those credit default swaps starting to capitalize, all of a sudden they start going down or staying stationary. So he calls up Goldman Sachs and he's just like, I'm not following. Why aren't these things being priced according to what's happening in the market? They're like, I'm not really sure. We'll have a look into that and we'll get back to you. And of course, they give it a little while, a month or so, and then they give them a call back and they're like, looks like there was just a little bit of a repricing. We've now adjusted them accordingly. And he says, no, essentially what you've done is you've now sold off all your positions, which you were seeing negative or like losses on, and now you've realigned your position so you're positive so that you're going to benefit from this collapse. So you have now managed to offload basically the selling of these credit default swaps, and you're now on the buy side. And I think that the way I see this is that they don't benefit from a housing market collapse unless they're aligned to that position. And I think that a lot of these banks don't benefit from Bitcoin, but if they're aligned to that position, I think they take both sides. They're trying to essentially push Bitcoin's price down because they don't want it to succeed. But at the same time, they recognize, well, if it does succeed, while the price is down, we might as well take out insurance and hedge our bets and build a position. And so they benefit both ways. They're trying to suppress the price, and it wouldn't surprise me if they've been buying this whole time.
Yeah, and just for the average person, just so it made sense coming from myself, I think you said it beautifully. And JP Morgan's fear and greed, not the average person. So you answered that beautifully because it's JP Morgan, their own fear and greed, and they're playing both sides of the spectrum. I would love your thoughts on just like the Bitcoin, the bonds that JP Morgan has, or whether it's Saylor and what Saylor is doing, the lending from Strike, with Tether, what's going on. It seems like some of this is, again, going to how can we centralize things? How can we separate people and create paper claims and separate people from their Bitcoin? Like when you look out across the horizon with like all of it and what's happening, where do you kind of see things shaking out? Does it feel like that to you? I don't know if you've seen this in the Simon Dixon stuff, but I would love your thoughts on some of this.
I saw Simon Dixon call up Jack Mallers. That's one thing that I saw. And I think that we see how the existing system functions. And through lobbying, I think a lot of these big institutions, they want to push regulation that's in their favor that creates a bit of like a walled garden so that it's much harder to compete with these institutions. We've seen this time and time and time again. We saw it with, 2 years ago when Silvergate and Silicon Valley Bank kind of went down. What we ended up seeing is a lot of legislation go through where they basically say, look, the government through the FDIC, from my understanding, previously it was up until $250,000 US, your cash balances in your account were covered. Well, anything above that was not covered. So what did they end up doing? They ended up saying to the big banks, JP Morgan, Goldman Sachs, Bank of America, they said, hey, we're going to lift that limit so that it's unlimited above $250,000. But all of the smaller credit unions, you guys are still capped at $250,000. So what does that do to all of the wealthy individuals that have more than $250,000 in their small little credit union? Well, it's now got an incentive for them to move to the big banks. And so all of a sudden, we saw a massive wash through in these smaller little credit unions, and they're struggling. And so a lot of regulation is put in place to create consolidation and monopolies. And I think the same thing is true even in the Bitcoin space. And I think that what Simon Dixon was calling out Jack Mallers on was the fact that a lot of these startups in the Bitcoin space, they want to get funded. But then you've got to question, well, where's this capital coming from? And many times the capital is coming from these individuals that are heavily integrated into the traditional financial system that has a disincentive to push Bitcoin. So you've got to wonder, like, why are they funding their opposition? Is it because they're trying to, they're trying to take it down from the inside out? Is it because they're trying to hedge? We're never necessarily going to know that answer. But I would say that I think that it's scary sometimes because the traditional financial system is so interwoven and complex. And if people want to silence one another, if they want to kind of change the course or the trajectory of a company, if you're heavily indebted to someone, you're going to be under pressure from them. We see that in the pharmaceutical industry. Like 70% of media is funded by the pharmaceutical industry. Yeah. So the moment you come out, if you're a TV show host or whatever, and you try and voice any form of dissent against Big Pharma, well, you just get fired and you lose your job. Because ultimately, media is compromised because the majority of their balance sheet comes from Big Pharma. And so I think what I hope is that the Bitcoin space, I hope that we have enough developers and enough forward momentum without the need for excessive external input from the traditional financial system, so that we can hopefully minimize the chance of people being compromised and pushing things in certain directions.
In the macro, again, zooming out, that's kind of what it feels like to a degree as well, what's going on, which is there's a lot of, and again, this is from one person that's been studying this stuff for 20 years and Bitcoin for 10 years. It's like you're looking at it. And again, it goes back to this fear and greed thing of the legacy system. There's a large cadre of people now that have been in Bitcoin now for call it 8 to 10 years, where if price runs up to 200, then 400, then 800, then 1.2 million, there's a lot of people that have a lot of wealth at that point. It feels like there's a little bit of fear from the old system of letting that happen, where it's like you can keep that ball underwater for a while. And maybe that's what we're in right now for a while, but then eventually it explodes and comes out of the water. So anyway,
well, just like on that point, I read a tweet. This must have been maybe like 2 or 3 days ago. And I thought it was fascinating. It talked about how like the baby boomer generation controls the majority of wealth. Yet all of the value being created in society comes from predominantly like the millennial generation and what's the generation? Gen X above Gen millennials. And so what you're recognizing is that there's this group it's kind of done. They're just like, hey, we've been contributing all of this value, propping up society. We're paying our taxes. We're paying our bills to fund the boomers. And they're kind of just like, we're done. And I think that given that the majority of equities, the majority of real estate, even in a sense, the majority of gold is held by boomers, I think people are looking for an alternative, one that ultimately they're going to benefit from their productivity. And I think that Bitcoin is that answer. But again, what we're talking about previously, there's no such thing as intrinsic value. Bitcoin may be the answer, but it's until the story shifts and the majority of people recognize it's the answer, you're not going to see the inflows from that perspective.
Do you think that Saylor, in I guess kind of 2 parts, but Saylor being a net positive or net negative to Bitcoin and kind of what we find ourselves in a lot of what we're talking about, but then also the rest of the treasury companies? Because again, it feels like we're kind of hinging on like, is there going to be a bunch of treasury companies going down here if we're going to a bear market all of a sudden and things start protracting? But also, Saylor seemingly will be good, but like, where do you kind of see all of that when you look across the treasury landscape?
Oh man, this is my controversial take. I'm not the biggest fan of Saylor. I think he's a great guy.
I love it.
And don't get me wrong, I have listened to early on. I listened to the What Is Money podcast with Breedlove.
Yeah, Robert.
It was one of the
Breedlove show.
Yeah, maybe 2021, 2022. And so I think Saylor has brought, from a knowledge perspective, some of the most incredible value into the space. And I think that a lot of us understand and give a lot of credit to Saylor, and that credit is due. However, I think that what's happening is he is recreating a lot of the traditional financial sector on top of Bitcoin. And in many ways that is needed. However, I think that is creating a lot of complexity. And with complexity, we can't necessarily determine what are the second, third, and fourth order effects of these things. And I think initially, when he's just looking at it from the perspective, we have MSTR shares, you can buy shares, and we're going to try and do our best to increase the amount of Bitcoin on our balance sheet. Awesome. But the moment you get Strife and you get Strike and you get all of these Stride and all of these different products, I think that it's sometimes hard to be able to understand how are they interacting with one another and how does that interact with the larger market. And the fact that we're not necessarily getting transparency about his holdings, on-chain analytics and things like that. I tend to fear that if anything causes the next major downturn, it's probably going to be the Treasury companies, because we've taken out too much debt and we've tried to play a complex game in a world that is unbelievably interconnected and far more complex than this complex game that we're trying to play. So I think that ultimately he's been a net positive on the knowledge front, but I think I'm a little worried about the consolidation of coins underneath MicroStrategy. And I think that from the Treasury company side of things, just in general, I think the same thing is happening where if you are a company that has amazing cash flows, you've got an incredible product, I'm all for companies accumulating Bitcoin on your balance sheet. Go and accumulate Bitcoin because you're saving in the best possible money, the soundest money that has the best potential to preserve your purchasing power or grow your purchasing power into the future. But the moment you are taking out immense amounts of leverage, you're taking these companies that have been struggling, they don't necessarily have a product market fit, they don't really know who they are, and now all of a sudden they're like, we're just going to transition into a Bitcoin treasury company, take out a whole bunch of debt to buy Bitcoin. I think this is where we start to see the issues. And what we're finding is that some of these companies, like for those that aren't familiar with the terms, there's something called like MNAV, like multiple of net asset value. So it's like if they have, let's say, $1 million of Bitcoin on their balance sheet, if that company is trading publicly at $1 million, you could say that it's an MNAV of 1. So it's basically trading at market value based on the value of assets on its balance sheet. Well, an MNAV of 2 would mean that it's trading for 2 million, but it's only got 1 million of assets on its balance sheet. You could say if it was trading at 500,000 instead of 1 million, it's got an MNAV of 0.5. What this means is that the moment these companies start trading below an MNAV of 1, they're like absolute prime for hostile takeovers. Because if you think about it, if you're a company and you've got a whole bunch of cash on your balance sheet, you look at Berkshire Hathaway, you look at Microsoft, you look at some of these companies with billions of dollars on their balance sheet, and that money is basically burning a hole in their pocket. They've got to figure out, how do I get yield? How do I make money? And if there's no companies that they necessarily want to buy out there because the companies aren't providing value, if all of a sudden you're seeing a company that is trading at 0.8 MNAV or 0.7 MNAV, that effectively means that you could hostile take over the company, sell off its Bitcoin, and capture that difference of 0.7 MNAV would be a 30% difference from spot to the price at which you bought that Bitcoin. So you could overnight sell that Bitcoin, catch that 30% spread, and just basically liquidate that Bitcoin. And so what I'm worried about is that if these treasury companies continue to play games and then all of a sudden the market isn't valuing them and they start trading below the multiple net asset value of 1, I fear that we're going to start to see maybe some selling, some liquidation of that Bitcoin.
There's one thing more important than Bitcoin: the time you have and the people and relationships you build. In a world full of noise, the real signal is meeting with other Bitcoiners IRL, finding Bitcoin-only events, connecting face-to-face, and supporting the circular economy through Bitcoin-friendly merchants around the world. That's exactly what Club Orange is built for. Build your circle. Support Bitcoin-only companies. The only place in the world you can find all that in one spot is the Club Orange app on iOS or Android. Go to cluborange.org, what used to be the Orange Pill app, or scan the code here. Now that you have your hardware wallet, the key data generated needs to be stored in something forever that can withstand fire, flood, nuclear fallout, checks, hockey pucks. This is your 12-word C plate, your 24-word C plate. After a lot of people asking for your 12-word C plate, here it is, stampseed.com, code Brandon for 15% off. After everything that's gone on in the world, fires we've seen in the Pacific Palisades, what we've seen happen in Hawaii, everything gone. Titanium seed plates withstands everything. Your posterity will thank you. It only takes a few minutes. Don't let these little things, these small investments, scare you from the most important aspects of Bitcoin and the first money we have ever conceived here on earth. Stampseed.com, code Brandon for 15% off. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON.
Man, it's so tough, Sab, because I've had this conversation back and forth over the last, I'll just call it the last year here, obviously since like the ETFs and just like really have kind of started going and prices really jumped up, Trump coming in, stuff like that. And Jeff Booth always says, right, if it stays decentralized and secure, we know it's going to change human beings. It's changed all of us. It's changed our perspective on things. We might think some things that we didn't before. It's changed how we live our life. And so we know that will start happening and dominoing to everyone else in the world as well. And so in saying that, it's a permissionless money that no one can stop. We know countries are going to buy because they have to. We know companies will buy because they have to. Like, when's the right time to let them come in, right? Like, it's permissionless. You can't just deny access to somebody, but everyone wants to like fight of like, Saylor needed it. Obviously his story is that, and then he gets in and now they start going off and doing their thing. But now you get into the world of, okay, make sure that we're not educating people on the sense of like, oh, it's just another asset in your portfolio. No, this is outside of that. It's a completely new protocol outside of all that. So where's that distinction in your mind, and where's that kind of riding the line between getting the Trojan horse inside the walls of power and defunding that system, and also being careful that we don't just act like, oh, okay, it's captured and centralized, and okay, well, it's a good try, guys. Let's go back home now.
Totally. And it's challenging. And I don't think I can give an answer in saying that it should be this way or it should be that way, because ultimately it's the collective through where they direct their capital and the decisions they make that decides the outcome. But the way that I kind of look at it is that the reason why people play a lot of these financial games, the reason why you've got all these treasury companies constantly looking, how do I maximize the amount of Bitcoin on my balance sheet? I'm going to take out as much debt as possible, is because we have a monetary system that is broken. We have a monetary system that life is getting harder and harder because of inflation. So everybody is pushed into taking risk. Everyone is pushed into investing as opposed to saving, simply to try and preserve their purchasing power. And so I think that all of these companies, all of these individuals, they're doing what is rational, which is, what is the best thing right now? What is the fastest racehorse to be able to try and improve my situation? However, I think that sometimes we oversee, well, what is Bitcoin? And I think Bitcoin is just money. Bitcoin is just money, but it's money that allows us to potentially store our purchasing power into the future. And I think that when we actually step back and recognize that if we just had a monetary system that enabled us to preserve our purchasing power, enabled us to save, I would argue that 90% of the financial sector wouldn't exist. It wouldn't exist because you wouldn't need all of these products which promise gains because you don't want to save in the local currency. And so kind of going back to kind of your question, I would say that ultimately, when you really dig down the rabbit hole, you start to just recognize that Bitcoin is just money. And I think that a lot of these individuals playing a lot of these financial games on top are still kind of stuck in the financial sector. They're still stuck in the financial system, and they're trying to just they get caught up in the number go up technology. How do I just maximize the amount of money I'm making? And for me, I think that Bitcoin is far more than that. When we have an economy that steps back from constantly trying to increase financial gains, stops focusing on GDP and just increasing monetary transactions, and we ask ourselves, what is actually most important in life? What is most important in life is, like, I kind of tend to call it like the 3 C's: connections, contributions, and challenges. Is when we connect with others and we build community. It's when we contribute back to society and we feel like we're actually creating real value not necessarily being, I'm just trying to create a whole bunch of fluff on paper, add zeros to people's bank accounts. I'm actually trying to contribute back to my society, create value, products and services. And it's when we challenge ourselves, whether it's in our sports, whether it's in our communities, whether it's in our families, whether it's in our passions. And so the way that I kind of tend to see it is that we're just caught up in a monetary system and we're trying to do the best we can with the information we've got. And people sometimes don't realize just how caught up they are in trying to reach these monetary goals, but not necessarily recognizing that that's not what is going to bring happiness. And all you need to do is watch a handful of celebrities talk about how they finally reached their goal of making $1 million a year, $10 million a year. They got the mansion, they got the Lamborghini, they got the Rolex watch, they got the TV show, and it didn't create happiness. What actually created happiness was when they stepped back from all of that and they spent more time with their family and their community and such. And I think that's what's just so amazing about Bitcoin, is that when people start to have a little glimmer of hope, when they start to have a little glimmer of hope that they may be able to achieve just some form of stability in their life, then all of a sudden they have more capacity to reflect inwards on what matters most. And so that's where I think Bitcoin is really incredible. But I think some people still get caught up playing fiat games on top of Bitcoin.
Yeah. And in saying that, would you call the last year or so, year and a half, with the ETF stuff going on and all this, a distraction from it's adoption of money, a new protocol, self-custodying, the actual revolution to funding that old system? Because the reason I ask is, again, it kind of circles this whole thing of, I think there's a lot of Bitcoiners. I was one of those people too, where you're looking for justification to, like, I go back and forth between converting the king and bottom up. We're going to educate people one at a time. Here, let's go back, roll up our sleeves and go back to looking glass education, go back to the podcast, go back to writing books, and doing the things necessary to actually orange people. Because let's be honest, Donald Trump, you have the biggest, the free, the whatever leader of the free world. You have El Salvador, you got these people talking Bitcoin, but I don't see adoption, it's happening is slowly underneath the surface, but it's not like all of a sudden there's 80 million Trump voters. How come 5%, 1%, 10% didn't just convert and automatically love Bitcoin all of a sudden? So I think that's a thing of Bitcoiners need to step back and kind of look, like, whether it's the ETFs or the Saylors or the Trumps, and say, hey, maybe we're going the wrong way a little bit. I don't know. Like, what are your thoughts on this? Because I think that there's a lot of Bitcoiners thinking, like, yeah, this is verification of, like, look, world, like, we're going the right way. And all of a sudden people are like, no, we actually hate you more. I mean, like, where are we at, Seb? Like, I don't know. I'm very confused.
But this is a big question, and I don't even necessarily know how to quite answer it. But what I'll say is,
take your time. Yeah.
There's some amazing books. I really appreciate reading about trauma, how we show up, how we pass down knowledge down generations. One of the things that I've come across many times is it looks at, say, take like the Aborigines in Australia in comparison to like the hippie movement from the 60s. Well, what is the difference between these things? The Aborigines, they've been able to pass down knowledge for upwards of 100,000 years. And so you're just like, man, how did this community pass down knowledge for 100,000 years? And it was ultimately because they spent time intergenerationally. The kids spent time with the parents spent time with the grandparents spent time with the great-great-grandparents. And so when kids are experiencing this multi-generational connection, knowledge gets passed down, stories gets passed down, skills get passed down to be able to understand the world around them. Well, the hippie movement is a peer movement. It has started in the 60s, 70s, and it was basically peers. It wasn't grandparents and great-grandparents all in one another. And what have we seen? Within about 1 generation, 2 generations, that movement, the hippie movement, has nearly disappeared completely. So you're saying the Aboriginal movement has been passed down 100,000 years, and the hippie movement couldn't even make it 2 generations, and it's almost gone. And so what you start to recognize is when you have a peer movement, it's really hard to pass down knowledge and information. When you have an intergenerational movement, it's much easier to be able to pass down this knowledge. And so why does this relate to Bitcoin? Well, what I think is really interesting about Bitcoin is that because Bitcoin has kind of got this number go up technology, a lot of people, they come into Bitcoin, they start to grok this thing, and all of a sudden they're like, this is profound. This has profoundly shaped who I am. It's changing how I'm showing up in the world. So they want to talk about it. Then they go through 1 cycle, 2 cycles, and all of a sudden their net worth has added a few zeros on the end of it. And then as they're kind of coming into their 3rd cycle, they're almost just like, I'm able to actually focus on what matters to me, which is my family and my community and my challenging myself, which we were talking about earlier. I'm able to focus on these things that matter to me. I don't actually want to be public facing. Bitcoin's gone up enough. I don't want to be public facing. So what do? They step back. And so what I find really interesting is that the people that have actually been in Bitcoin the longest disappear. And so who are the voices at the front of Bitcoin? They tend to be the people that have only been in Bitcoin, like sub 2 cycles, maybe max, 1 cycle. So you've got this really skewed thing where you're kind of passing stuff on from the people that actually least understand Bitcoin in many ways. And so I think this is why Bitcoin is changing each cycle. So I'm hoping that given Bitcoin's code, it's able to maintain its authenticity and the values in which I think the original cryptographers that kind of came into Bitcoin, what they really wanted to instill. I'm hoping that we can continue to maintain that. But I am seeing a lot of like institutionalization. And I think that it is people coming into Bitcoin without that cypherpunk values and the privacy and the act of being able to preserve one's sovereignty. I am seeing that dissipate a little bit, and I just hope that it doesn't compromise from a code perspective.
Boy, yeah, I could not agree more on that. We brought up gold and silver earlier. Any thoughts? Just kind of what's going on there? We talked about like the legacy, like boomer side of things, and also what's happening. Obviously, that's in central banks and the governments. Do you think there's any chances that some of these Western world countries, obviously America, that they're revaluing gold against the dollar or vice versa? Do you see any of that playing out, or how do you think this the Bitcoin gold, how all these things come together here?
Two things that come to mind is, again, like we spoke about, this idea that value is still a story, it's subjective. And I think gold and silver in many ways have just got a much larger, longer history. And so it makes perfect sense as to why gold and silver are moving on up, just because of what is happening in society and the instability. And people, I think that even if they may not be able to articulate precisely what is happening to them, they feel viscerally how challenging life is today in comparison to what it was even pre-pandemic, even 15 years ago. And so I think that people are feeling like something is wrong and they may not be able to articulate it. And gold's story is that gold has been able to preserve purchasing power for thousands of years. And what blows me away is that gold, from my understanding, is that in the last 25 years, gold has outperformed the equity market, like the S&P 500. So you're just like, this is mind blowing. All of this capital that's flooded into these companies, and they still can outperform this kind of like hunk of physical metal. Like that's mind blowing to me. It's wild. But to me, I still think that what people don't necessarily grok is just the manipulatability, if that's a word, of gold. And there's a really interesting series called the Eurodollar University by a guy called Jeff Snyder. And I think it's Alhambra Investments. But he goes through kind of the Eurodollar system. And I won't go into like what that is or how it functions. But what I will say is how we transitioned away from kind of the gold standard and what are the flaws of gold. And one of the things he talks about is we have no idea how much gold there is in the system. And we have no idea because none of these central banks have ever been audited. We have to take their word for how much gold is on their balance sheets. Now, what is interesting about that is there is regulation in place that basically says that when they do any form of accounting and say, hey, we've got X amount of gold on our balance sheets, that gold can include IOUs. So let's just say a gold miner recognizes, okay, I've got this tenure to mine in this area, and I think there's 1 ton of gold in the ground here. What it can go and do is go and borrow 1 ton of gold from the central bank, go and sell that gold into the market. So it now capitalizes, it basically gets its capital up front so it can fund the mining operation to pull this 1 ton of gold. They pull it back out of the ground, then they give that gold back to the central bank. But what is interesting is that during this period, what has happened? You've effectively doubled the amount of gold in existence. You've got paper gold because on the balance sheet, it says there is 1 ton of gold. But the miner has also now sold 1 ton of gold into the markets. So you've now doubled the amount of gold, which in effect has suppressed the amount of gold. You've basically got a selling position, but there's no equivalent buying position. And so I find this really, really interesting, is that we don't know how much gold there is in existence. There's so many of these gold IOUs. You even look at a country like Canada. Canada has sold all of its gold. Like the central bank doesn't hold any gold these days. And so I just think that the world is an interesting place. And I don't think gold lives up to the technological world of which we live in. It doesn't enable for fast borderless transactions. It doesn't enable for like international payments effectively. It's so expensive to move gold. So I think that in time, people will start to recognize increasingly just the importance of Bitcoin plays.
What are your thoughts on the end games? We touched on this earlier. I wanted to get your thoughts on Bitcoin's end games. We've talked about the Bitcoin education being passed down from generation to generation and people seeing how that changes their life and what happens. Where do you fall on the spectrum of what the final resting place is of Bitcoin? Does it account for all assets in the world? So where do you see the final, it could be 100 years from now or 1,000 years from now, but where do you see, what is Bitcoin to you in that sense? And you answered it earlier, but I love your thought on just like the resting spot of Bitcoin being money and where that finally ends?
I would say I align somewhat with kind of how Jeff tends to view the world, in that I think that what we will see is we're going to increasingly see this bridge being built into the world that is Bitcoin. And instead of this kind of negative, I'm opting out of our current system, it is, I think we've got to look at it more positively, which we're opting into a new system, and one that meets people's needs far better than this existing system. And I think the challenge is people naturally, we're conformist. We want to be a part of society. We don't want to go against the herd, but you're always going to get people that are willing to go above and beyond and do something which, even if society says, hey, that's not a good idea, you shouldn't do that, people are willing to stand up for what they believe in. And so I think this is what we see as the early adopters of Bitcoin. But increasingly, as the average individual sees nation states like El Salvador, their homicide rates start to collapse and their quality of life start to increase, and investment capital start to flood into their country based on the values at which they're kind of projecting. I think what we'll start to see is that people that have adopted Bitcoin are looking at the world through the lens of Bitcoin. Their quality of life is going to be increasing, or people that are living under a fiat standard, their quality of life is going to continue to decrease as it has done for decades. And at a certain point, that conformist mentality starts to wear away at people when they see others thriving while they're struggling. And so there's a famous saying, which is kind of like, people will change when the pain of change is less than the pain of continuing what it is that they're doing. And I think that we may not be there yet. Obviously, we're not there yet because people haven't moved over to Bitcoin. But I do see more and more people reach out to me and just say, hey, like, I'm struggling. I don't know how I'm going to preserve my purchasing power. When I'm saving, house prices are increasing quicker than I can save. And so I am seeing people reach out to me consistently over the years. And so I think that will happen. It's just going to take time. And so I see, obviously there's no certainty in life, but I lean towards saying that in the future, not necessarily the near future, I think we will move towards a bit of a Bitcoin standard, because Bitcoin is the logical answer, the rational answer to be able to preserve purchasing power. And as, what's his name? Blanked on his name. He talks about the head of Stone Ridge Asset Management. He talks about how Bitcoin is a system built on rules instead of rulers. And yeah. I love that. I love that because it's just like everybody, whether you're Bill Gates or you're a homeless man on the street, you're all playing by the same rules. So it creates aligned incentives. And so I think that we will move towards a bit of a Bitcoin standard, and I hope that we move towards a Bitcoin standard, just because I think that it realigns the incentives for collaboration and such. But overall, I think our current system isn't serving people, and people feel it, and they can paper over the cracks only so much before people essentially give up on the existing system.
What was like the aha moment for you for Bitcoin? For me, two of the big ones were understanding I could carry my wealth in my head. And then the other one was seeing the log chart of Bitcoin. Those are two just very simple ahas I had, 8 to 10 years ago, where it was like, whoa, this isn't just like the fiat price going up and down. This is a network effect. This is the log chart, seeing it go up to the right over time, and just, user growth, and then carrying that asset, that protocol, your wealth in your mind, which we've never been able to do before. So those were some of mine. What were yours?
I've spoken about this a couple of times, but I think that there kind of tends to be these moments that happen pre-Bitcoin that set us up for actually understanding Bitcoin when we finally see Bitcoin for what it is. But I would say that there was two moments for me, and this goes back to my teenage years, so even before Bitcoin existed. One of them was in hindsight, or on reflection from my childhood, recognizing that my mum had to raise, as a single mum, my two brothers and I, and realizing that when we have a financial system that is constantly impeding people from showing up authentically, parents aren't able to support their kids as much as they'd like, so they can't meet their emotional needs to the extent they might have liked to. And so when I reflected on that, I was like, it's no wonder that maybe I have some of the insecurities I have, or seeing how my brothers show up in this world, our relationship with our mum was impacted by the monetary system at which we grew up in. So I think that moment, as well as my background, I was a backcountry mountain bike instructor, I was a coach, used to teach at a very high level. And when I started working in an industry, I was earning $15 an hour. And this is kind of in my late teens. And I started to recognize I'm never going to be able to afford a house. I'm never going to be able to kind of show up and raise a family. I've got to figure out another way to be able to generate an income. So I started to look into the financial markets. I started to look into real estate. And from going down that rabbit hole, I believed we were in a free market. I believed we're in this capitalist free market where capital flows to where value is being created. But from that, I started to take these positions expecting the market to do one thing and it would do the opposite. And I was like, I don't understand what's happening here. And it's when I started peeling back the veil and looking behind that I was like, we have a central bank that is constantly tinkering with interest rates and capital flows and regulation. And I was just like, this market is anything but a free market. And so I would say that it was these moments that really allowed me to grok Bitcoin when I did. And that's why when I'd say in like 2018, 2019 is when I started to really look into it. In 2020, I just like quit my job, dedicated my life to it. And so I've been working in this space since 2020. But yeah, I would say that those moments led up to me understanding Bitcoin. So I wouldn't necessarily say it was something about Bitcoin that an orange pilled me. It was more that I just recognized our current monetary system was not conducive to being able to show up authentically, direct your energy to the things that you are really passionate about, and to be able to also just be passionate about things. People just get stuck in this system where they're essentially working to live. And it just makes me feel sad. And I don't think that has to be the case, because as Jeff Booth talks about, humans inherently, we want to increase productivity. We want to increase efficiency. And so we should be driving down prices because technology is constantly advancing. But instead, prices continue to rise. And it's a byproduct of broken money.
Speaking of the money, what are like your definitions of money? You know, you refer to, you know, being a medium of expression over time and things like that. So I'd love you to elaborate, unpack a little bit of this, because this framing, I think, is massive to understanding the problems we have.
So at its core, I see money like language is a medium of expression. It's how we express to the world what it is that we value. And so you can see this in action. If you walk into, I don't know, a grocery store and you start to see someone buying grass-fed meat, organic vegetables, and then you see someone else buying cigarettes and microwave meals, you can see what they value by where they direct their capital. And so I think that money, in essence, it's basically what it is that we value monetarily, expressing that out into the world. But the problem with that is also, like language, we can be censored. And so you've got capital controls that dictate where you can and can't spend your money. You've got inflation, which is basically taking your purchasing power and the government is spending it elsewhere in society. So it's basically silencing you from being able to direct your capital towards the things you want to be able to, because your purchasing power no longer goes as far as it once did. And then we also see things like in, say, China. If I grew up in China and I wanted to go and support my family, and my purchasing power is diminishing and the government didn't allow me to invest outside of China, then it's impeding my ability to, again, I value my family, but I can't support my family in the way that I need. And so, again, these regulations are impeding me from being able to put forth my values into this world. And so I look at money as a medium of expression. And if I was to give like an analogy of why it is important to have an authentic, true medium of expression in society, or sound money, you could relate it back to childhood. Let's just say, as a child, your parents didn't like you expressing certain emotions like anger and sadness, which we see a lot throughout society. If your parents didn't allow you to express certain emotions, anger and sadness, every single time you were kind of angry at something, even if it was justified, your parents kind of suppressed it down. Nope, I don't want to see that emotion. Kind of go to your room, stand in the corner. What it ends up doing is it prevents us from getting to understand how we express ourselves and what is healthy expression. And so as we grow up, it's very easy to fall into the trap of depression, because depression is the depressing of emotions. We never learn how to express that. Well, the same thing is also true for money. When you impede monetary expression in society, where capital doesn't flow to where value is being created, what ends up happening is, as business owners, maybe we try to start up a business in a new industry and we think it's going to be successful, but all of a sudden, capital controls prevent you from capital flowing towards you. And so you're getting a distorted view on what society values. It's very hard for us as a society to thrive because we don't actually know what society values. We have no idea where capital would naturally flow. Instead, there's whole industries, whole sectors, which are booming only because of subsidies, only because of artificial capital flows. And so basically it distorts our society and understanding what is true and what is important, because our medium of expression is being capped, it's being silenced.
I would love for you to unpack a little bit as well the effects of downstream of choosing this money. We've talked about this, you know, we've both kind of mentioned this throughout this episode. And the problem in society is that a lot of people don't even understand the problem, let alone the solution, right? So like there's a lot of Bitcoiners that sit there and yell like, this is so obvious, but a lot of people don't even understand the problem. They know there's a problem, but they don't know what the problem is. So I would love for you to just outline maybe an example or two of some things that people may be dealing with, the effects downstream of choosing a certain money and how your life is affected once you choose, hey, I'm going down that river, I'm going down this river. Which way you choose, it affects obviously the rest of your life depending on what you're using. So I love for you to just unpack that, just so the average person has maybe some thoughts on that.
So I would start by even just saying, like, again, like if you as an adult are starting to face depression, and so what do? You go to the clinic, and the clinic says, hey, take this pill. What you're doing is you're treating the symptom. The symptom is depression. The root cause is that our parents never supported us in expressing certain emotions. And so you're not actually resolving the issue. Well, it's the same thing with broken money. If our money is deteriorating in purchasing power because of monetary like intervention, artificial interest rates, capital controls and such, because we're facing inflation, our money is losing purchasing power, what ends up happening? Well, we're no longer incentivized to save because our purchasing power is greatest in this present moment. It's losing purchasing power into the future. So instead, we're incentivized to consume. So then we have these wild consumption habits. And you could argue we have unbelievable consumption habits to the point where we're destroying our natural environment today because of the products and the services at which we're purchasing. And we're incentivized to continue to consume. But instead of actually looking at why is it that we have bad consumption habits, we put more regulation in place. We continue to go out there and break we've got greedy people just want this, we've got these bad consumer habits. And it's like, no, it's a product of broken money. And so that's kind of like one avenue you can go down. I would argue that the consumption habits we face in society are a result of broken money. If our money allowed us to preserve purchasing power, or even if that purchasing power grew over time, like in the case of Bitcoin, what ends up happening is people are now incentivized to save over consume. And so I think we'll see a far less consumption habits. What that means is less money goes towards these big corporations that are creating a lot of these products. And that means there's a lot more competition. If there's more competition, the ones that are creating inferior products wither away. So the ones that are creating greater products, higher quality products, end up surviving. So it changes the dynamic of consumer products. You can also look at it from a relationship standpoint. I looked at it, I mentioned previously about like the parent-child bond. Mm-hmm. What we've seen in Canada and in the States and in many countries globally is since the departure of the gold standard in like 1971, we've seen a doubling of dual earner households, both parents having to go out and work, and a halving of single earner households, one parent being able to support the household. And what that's meant is that kids aren't spending as much time with their parents because their parents are having to go and work more, and kids are spending more time with their peers. Well, a peer relationship, as I kind of mentioned with the Aborigines, is very different from a parental relationship. A parental relationship kind of gives you a bit of like a North Star, a compass. It passes down morals, it passes down values, it passes down knowledge, as opposed to a peer relationship, which is still ultimately important. But if all of our time is spent in peer relationship, when we're young, our number one priority is attachment. So we end up trying to attach to our peers, and to attach, we conform. So we want to look the same, we want to sound the same, we want to dress the same. And you just need to walk into any school today and recognize that all the kids look like robots of one another. They all look exactly the same. It's because they're looking to conform, because they're not having their emotional needs met, and they're simply trying to attach. And so I would say that broken money is pushing parents to go out and work more, which means kids are spending more time with their peers, which ends up with a society that never individuates. People don't understand what their risk tolerance is. They don't understand how they are. They don't understand how they want to show up and what their kind of values are. And what's really interesting, this is what I find most fascinating, is that broken money doesn't just impact us from maybe, say, a peer relationship standpoint. It impacts us before we're even born. And so what I mean by that, if you take like money is the number one stressor globally. And so if you're starting to feel stressed as an individual because of your financial position, what ends up happening internally? Well, our nervous system starts to react from stress. We start to release stress hormones, epinephrine, adrenaline, cortisol, and those stress hormones are incredibly hard on our nervous system if we're feeling them all day long. And if we're stuck in these kind of stress response states of like fight, flight, freeze, what ends up happening is we're suppressing our digestion, we're suppressing our heart rate, many times we're suppressing our breathing rate, and so we're impeding our nutrient absorption, our nutrient flow, our cognitive processing, our sleep, and so it starts to impact us materially on a like nervous system, immune system functionality level. Well, if a mum is carrying a baby in her womb, and that mum is stressed because of money, and of course they are because it's the number one stressor globally, what ends up happening is she floods the baby with all of these stress hormones. And that baby, when the baby comes out, is in like a hypersensitive kind of stress response, immune system response. And there are countless studies that look at the effects of this. So it's not necessarily the effect of money on the kid, but more so what happens when a parent is incredibly stressed while carrying a child. And what it means is the kid tends to have much worse health outcomes. They've got lower life expectancy. They've got higher rates of allergies, higher rates of ADHD, higher rates of even things like autism, because their nervous system never developed in the way that like nature had intended it. Instead, it was flooded with stress hormones. And so I would say that money is not only impacting kids when they're going out and socializing because they're not getting the support and attention from the parents that they need. It's impacting kids before we even enter into this world. So that's what I find so fascinating. And so that was kind of like two. What is it? Like the parent-child bond, and then you can look at it from the consumer aspect. And I'll share kind of one more, which is kind of like business practices. And that is, you can look at it from like many different ways. But I find that ultimately, as a business, in order to be able to receive capital, you have to create value. Capital flows to where value is being created. Well, what ends up happening is if you've got the government coming and bailing out companies that have been fiscally irresponsible, that have taken on too much risk, it enables that company to continue doing what it was doing. It doesn't incentivize them to change their habits. It doesn't incentivize that company that may have withered away for the employees to go back out there and change their approach to business. Instead, that company continues doing what it's doing. And because they receive bailouts, because they receive subsidies, the other companies that have been fiscally responsible, what they end up doing is they have an incentive to take more risks because they know they're going to be bailed out. So you end up with a society that is incredibly fragile. And we also see it from the perspective that if a company is trying to go out there and find employees, but you've then got the government giving out subsidies and stimulus, well, it becomes very hard for that company to go and find employees. And we saw this during the pandemic. Here in Canada, and I think it was the same in the States, we had something called the CERB, the Canadian Emergency Response Benefit. And if you'd lost more than 10% of your income, you were entitled to $2,000 a month. That's like $24,000 a year. If you take a look at tax receipts, 30% of people in Canada earn less than $25,000 a year. So you're saying 1/3 of Canadians had the option, do I want to go and work, or do I want to just receive money from the government for free? So what would they do? They take the latter as opposed to the former. And then all of a sudden, all of these kind of low-income jobs, cafes, bike shops, restaurants, they could not find staff. And so all these mum and pup shops just disappeared. They disappeared. They couldn't find staff. And so we started to see the monopolization of everything again. We saw the big corporatization of everything. And so basically broken money, with the governments being able to intervene, the governments being able to stimulate the economy, ends up prolonging fiscal irresponsibility and ends up impacting businesses from being able to show up and actually hire the correct staff for their job because people are disincentivized to actually go out and work. So you end up with a very unproductive society.
You touched on something earlier, and I would like for you to just expand on this just a little bit. This deflationary aspect, right? A neutral money that captures deflation and distributed those winnings, those gains, all the productivity back to the people instead. And this is the objection that you hear a lot of, well, society will just grind to a halt. You can't have this money that captures deflation because it's capped and all this finite. It's going to grind society to a halt, and people won't want to go do anything. They'll just keep hoarding it so they can get more purchasing power over time. So I would love for you to just touch on that for a minute.
So I think that there's kind of two parts to this. There's what is this deflationary society? Is our society naturally deflation? There's a second part, which is what would happen if we actually lived in a deflationary society. So maybe the first part, I briefly touched on it earlier, but it's this idea that Jeff Booth talks about in The Price of Tomorrow, which I see on your bookshelf just behind you. And this whole idea is that humans, since the dawn of time, we've always wanted to increase productivity and efficiency. We go from fishing nets to fishing boats. We go from horse and cart to cars. And each time we kind of go through this technological leap, we increase productivity, we increase efficiency. The perfect example of that would be something like Netflix versus Blockbuster. We've gone from having to drive down to Blockbuster, spending time and energy, gas, getting to Blockbuster, trying to decide on which movie do I want to rent, spending 30, 40 minutes trying to figure out the movie, renting the movie, driving back home, watching the movie, driving back to Blockbuster, dropping off the movie, driving back home. And so all of that time, energy, money, gas that went into watching one movie. And then you see Netflix, where for basically the cost of one movie, you've got millions of movies at your fingertips. So you're seeing the increase in efficiency, productivity gains from technology. Now, what that means is that prices should be falling as human ingenuity is thriving. Prices should be pushing, basic technology should be pushing prices down. But the problem is, we increase the money supply at a greater rate than technology is driving down prices. So what that means is we as consumers, we as the average individual never actually get to benefit to basically the extent we could do for technology driving down prices. So that's what I'm saying when our natural society, or as Jeff Booth says, our natural society is deflationary. It's inherently deflationary because people want to strive to get more for less. However, there's this pushback from kind of the Keynesian economists, from kind of the traditional financial system, which is, well, if prices actually fell, what that means, you could say, is that your purchasing power is increasing. So if your purchasing power is increasing, you're going to be incentivized to save. If you're going to be incentivized to save, you're not going to be contributing to society. You're going to hoard your money and society will grind to a halt. Now, that is true under the Keynesian lens where we've got a debt-based system. If people stop consuming and you've got all of these corporations that have massive debt on their balance sheets, if all of a sudden their top line revenue starts to drop because people start saving, they're going to be fiscally constrained and they're probably going to wither away and they're going to die out. And we're going to go through this huge wave of defaults throughout society. And so I absolutely believe in a debt-based inflationary system, deflation is massively destabilizing. However, I think once we move through into an inherently deflationary system, once we've kind of rid the world of a lot of this fiscal irresponsibility, a lot of this debt, what you realize is there's just a lot less capital going towards consumerism and people are able to save more, which means their quality of life improves. It means their cost of living falls instead of rises, which means people have greater capacity. And what I think that means from my perspective, and more of a philosophical perspective, is that I think we grow on a deeper spiritual level. Because if people have greater capacity and their cost of living is falling, yes, there's less consumerism, which means there's going to be less corporations out there vying for people's attention. But it also means that if people have more capacity to look inwards, they're going to be able to ask themselves, like, what is actually important to me? And realize that it's not the biggest house. It is not all of these external goods and things, the Lamborghini, the Rolex that make me happy. Actually, it is the connections, the contributions, and the challenges that we discussed earlier. And so I think that you could argue that, yes, deflation is destabilizing, but I would argue that that's in an inflationary system, a big debt-based system, because deflationary squeezes margins and we could see a massive wipe through, a wash through of kind of defaults. However, if we move through that period and we actually get to a world where prices are falling, I think it creates a very different dynamic. People are always going to spend money because we have to survive. People are always going to spend money because we have to eat. People are always going to spend money because the joy of going out and doing something with our partner, with our friends, our family, exceeds the benefit of saving an extra day or 2 days or an extra week. And so I think that there will always be money being spent. I think there'll just be a lot less money being spent.
In your eyes, how does Bitcoin, we're talking about obviously reshaping behavior and everything. How do you see like mining, for example? It's such a net positive for the world. I would love your thoughts of just mining and just cleaning up these, because of the incentives of everything and how it's cleaning up society. It's mind blowing that this hasn't got further runway. Just, I feel like it's the least talked about part of Bitcoin, and it might have the most impact. It might battle the incentives and the reshaping the incentives like you just outlined. So it was making me think of that. But I love your thoughts on that actual energy usage and that in the mining world.
The way that I see mining, and this was actually maybe to answer one of your questions previously around kind of like what was one of those big moments of orange pilling. Now, I should say I was already deep down the rabbit hole of Bitcoin, but when I understood the energy side of Bitcoin, it blew my mind wide open. I was just like, my God, this thing is incredible. And essentially, the way that kind of Harry describes it, or the way that I understand it, is that our grids always have to account for extremes. So in the summer, everyone turns on their heaters in the winter to be able to warm up the house. And again, we see energy usage double. And so because of this, you have to be producing enough energy to be able to account for maximum demand. And what that means is most of the time we're only consuming 40 to 60% of that maximal demand, but we're still producing all of that energy to account for maximal demand. And so that 40 to 60% excess is just being dissipated. We don't have enough batteries to be able to store that energy. And even if we did, we can only store it for such a short amount of time. I think they say in the US, it's something along the lines of, if you were to actually store excess energy in batteries and then use those batteries to power the US, you would get something like 1 day of usage. And then it's just like those batteries are gone. So we just don't have enough battery capacity to actually make storing energy in batteries viable. And so the majority of energy that is produced, 40 to 60% of it, is just dissipated and wasted. And so what is so fascinating about Bitcoin is it's a variable load in that you can basically turn on and off very quickly. And so if during normal usage, not one of these maximal spikes where everyone turns on their AC, if during normal usage, Bitcoin miners are able to tap into the grid, pull this excess capacity, they can mine Bitcoin with it, generating cash flow. That cash flow, ultimately, let's just say it's an energy provider who is kind of running these miners, that cash flow can actually end up lowering the cost of energy for everyone else on the grid. We start to see this down in Texas with, I think it is it Ergon? I've forgotten the name of the name of the grid.
Yep.
ERCOT and stuff. So
Yep.
what you start to see is Bitcoin, because of this variable load, is benefiting society because you're able to monetize this excess capacity that is basically, there's no other buyer for this energy. And so that, to me, the moment you realized, you can monetize energy that has no other buyer, that profoundly changed my perspective on Bitcoin. On top of that, it also means that if you're in countries like Venezuela, and you're in some remote area in Venezuela, and let's say it's got a strong little river, waterfall, somewhere to be able to kind of run a little bit of a dam, well, ultimately, the government's not going to invest in this kind of small little community to build a dam. It's just going to be way too costly, and it's not going to produce much of a benefit to Venezuela. So what we're now seeing is these smaller communities, if they're able to kind of raise a little bit of capital, build this dam, and then hook up the miners to that dam, they're able to generate revenue for these local communities. And so we're starting to see energy coming to these smaller communities, Africa, South America, that up until now, there was no incentive for the government to support those communities. And so I think Bitcoin, from the perspective of energy, is changing how we think about energy because it is a variable load that can be turned on and off very quickly. And so that does mean, I didn't really touch on it, that if all of a sudden we do start to see a massive spike in energy usage from the average individual because there's a cold snap or a hot spell, Bitcoin can just turn off. So it's not impacting the average individual. It's not like they can no longer gain access to that energy that the Bitcoin miners are consuming. And then the final point I'll kind of add on that is that we're also starting to see things like flare stacks in like the oil sands, where when there's a lot of like fracking or certain types of oil products, the output is liquid natural gas. The output is methane. The output are some of these kind of like gases that are unbelievably flammable and bad for our environments. And they're just kind of burning them off into the atmosphere. And what's so amazing is that up until now, it's been too costly to capture these gases, put them in a pipeline, send them somewhere else and try and sell them. And so we just burn them off. And what's amazing about Bitcoin is you've got a free energy source. So you're able to take this energy, bring a miner directly to the flare stack, and then capture that energy, reduce like something like 95, 99% of the particulate going up into the atmosphere, use that energy to run the miner and generate cash flow. So I think that there's amazing things that miners are doing to this world. I think we just got to step back from this idea that using energy is bad, because in general, like there's not a single low energy, high GDP country in the world. Naturally, GDP and energy consumption go hand in hand. If you want to increase quality of life, you need to increase energy consumption. And energy consumption is not bad. Everything needs energy. The wolf that is wandering through the wilderness is still going and eating animals to go and consume nutrition, to go and fuel its body. Like everything needs energy. And we just got to step back from thinking that energy consumption is bad.
Energy is everywhere, anywhere and everywhere all the time. It's never destroyed. So just newsflash, PSA for anyone who was unsure, maybe went through a little too much government run schooling. You can't destroy energy. It just transfers states. So there's plenty of energy in the world. So, and is there anything that scares you in Bitcoin right now? We've talked a lot about a lot of good things and things that you and I believe are coming down the pike and shaping incentives and things like that. But is there anything that worries you or scares you inside Bitcoin, or whether it's through adoption, maybe something we hadn't touched on earlier? Is there anything that just, is worrisome?
I would say that maybe it's what I was discussing very briefly earlier around this idea that each cycle we're losing some of these OGs. They get into a more financially stable position where they're able to kind of like direct their energy to maybe other areas of their life. And so I think being able to continue to kind of push the core cypherpunk values, accountability and sovereignty, integrity, being able to kind of push these core cypherpunk values into the future and not necessarily get swayed by the fiat values, which kind of tend to be less about collaboration and more about just like individualism. How do I just get what I can from society because I'm struggling and I just need the fastest possible racehorse and I just need to kind of take these lotto tickets. How do I do anything I can just to survive? And so I would say it's just like, how do we continue as a community to continue to instill these core messages, these core values in our message.
Yeah, it's interesting. And what do you think the Bitcoin community? Because again, you're an author, you're an educator, everything. I'm working on a few books, doing education, doing podcasts, like a lot of these things. And it feels like there's many people doing it, but also simultaneously there's almost no one in the world doing it. And that's what's this weird paradigm. We have free speech, but we don't have free reach. As an author, someone that has written an incredible book and is an eloquent speaker, I'm like, what do you think that Bitcoin holders, node runners, miners, educators, podcaster, authors, like what's missing out there that's needed, the culture that's going to drive people forward? And again, the context for this is that one of the things I'm writing about is the American Revolution and how there's only a couple % of people that dragged everyone else across the finish line. Most people did not get up and do anything. Some might have supported it, but most were like, yeah, they're fearful, they're apathetic, they're indifferent, they're whatever. And the rest of the country got the Bill of Rights and the Constitution, but only a few people participated, and only a few %. So it feels like Bitcoin's going down that way. But I would love your thoughts on all that.
That's a really interesting take. And I'd be fascinated to read that book. I think that'd be so cool to read. And
I'll have you help me with it.
Oh man, I would be more than happy to have a read over any version or any content you put out
Absolutely.
there. And, you just let me know. But I would say that, so in my book, there's a chapter on like the psychology of totalitarianism. And I reference a book called The Psychology of Totalitarianism. Mm-hmm. And essentially what it talks about is this idea that when you look at these totalitarian environments, how does change take place? There kind of tends to be like 3 areas of society in terms of the populace. You've kind of got this 10, 15% that will always stand up for what they believe in. And so in many ways, I see this as the Bitcoiners. They say this society is not serving us. How do we create a society that does serve us? You're then going to have the majority that's kind of like usually around 60%. And these individuals, they just want to live. They don't really care either way. And they kind of tend to lean on either the individuals that are standing up for what they believe in, if they're loud enough, or there's this other smaller kind of group of another kind of like 10 to 20%, which are very vocal, but they're just pro-government. No matter what the government says, they're not going to look into the why or the details or the data. Instead, they're very conformist and they're very pro-government. And so the reason why totalitarian tends to happen is because you're competing against this group that no matter what happens, they're always pro-control. And if you don't have a loud enough voice, the swing group of the 60% that are kind of just wanting to exist, they will kind of move towards that kind of pro-government take. And I think that we've had that for quite some time. But I do think that the pandemic in many ways has opened a lot of people's eyes. I think people are starting to see behind the veil a little bit that maybe the government doesn't have our best interests at heart. Life doesn't seem to be getting easier, even though they keep promising more and more and more. And so I think what's happening is when it comes to a space like Bitcoin, I think it's just so important that no matter who you are, just to put yourself out there. Whether you're a doctor, a dentist, a freaking dog washer, a mountain bike instructor, a hockey player, I think it's just about putting yourself out there and sharing your perspective, because you have a unique take on the world and you're going to have a unique cohort of individuals that you speak to. And so that's where it's like some of us, myself included, for years I watched Bitcoin from the sidelines. I didn't step in and I was just like, oh, I don't know enough to be able to put myself out there. I'm not Ray Dalio, so how can I talk about macroeconomics? Yeah. I don't understand these things to the extent that other people do.
Imposter syndrome.
It's not worthy to put myself out there. And I don't think that is true. I think that change happens because people are willing to stand up for what they believe in, but we're always growing. And as long as we're willing to be intellectually honest and change our narrative and change our what it is that we're talking about when new information arises, I think that's all we can ask for. Just put yourself out there and speak to your unique cohort of individuals.
I could not agree more. I'm a firm believer in, evil only exists because good people stand by and do nothing and stand silent by, right? So yeah, I could not agree more. So the last real question I have, it goes along lines similar to the end game we were talking about earlier, and just from the macro asset price perspective that we talked about, but this demographic shift, again, something we've touched on a lot throughout this episode, which is, but I call it the hippie bubble of that generation. The hippie generation is the one that is in power. They have all the wealth. And when that generation sunsets, I feel like there's going to be a massive shift in the next 10 or 20 years because of that generation receding from power in every way possible. They will be receding from power, and this new generation wants transparency. Obviously, what you mentioned earlier, like tech generation. We want transparency. We want things done right now. There's good and bad that comes with that, but we don't like opaqueness. And so that's where I think a lot of things change in your eyes. Does the demographic shift when it comes to Bitcoin adoption? Do you see that playing out that way as well when you kind of look out and see just, hey, when does this thing really start taking off?
I would say that there's some factors that we're coming up against. I write about them in my book a little bit, where we're going to face this huge kind of demographic headwind. We already are facing this huge demographic headwind, whereby because life is getting harder, a lot of nations, people just can't afford to have kids. So they're just not having kids. And so we're seeing the birth rate like fall precipitously. And so in most Western nations now, like in order for our basic population to stay stable, ignoring immigration, what you have to have is a 2.2 birth rate, which basically means that every couple has to have 2.2 children. And we're far below that in many Western nations. And so the way they're countering that is through mass immigration. So they're countering that through just bringing in people after people after people from a lot of these African nations and such. But I think that the challenge is, and there's a lot of studies that look at this from like Sweden and Denmark, and they look at what is the net benefit of bringing people from different nations into your country. And what you recognize is that when a lot of Western nations travel and move to another Western nation, so you have a Brit moving to Canada, you have a Canadian moving to the States, an American moving to New Zealand, they usually are a net positive. Usually a net positive significantly. Across their lifetime, they contribute something like $300,000 to $400,000 per individual to like GDP, to the economy. When you look at a lot of these African nations, we're trying to fill this population decline with like the developing country and such. And what we're recognizing is that some of these nations like Somalia and such, a Somalian coming into a Western nation is impacting GDP across that individual's lifetime by $1.2 million negative.
Wow.
That's not positive. And so it's a huge draw on society. And we have these big families coming in and immediately going on benefits and just sapping society dry. And so I tend to be, and this is maybe a bit of a controversial take, I tend to be of the opinion that immigration is positive when there is a lot of strict guidelines around immigration, so much so that if someone wants to move to your country, they want to bring value to that country and they want to assimilate into that culture. I think the moment you start bringing in and mixing tons and tons and tons of different cultures under one roof, what ends up happening is you create a lot of infighting. Like a lot of these Western nations are Judeo-Christian beliefs. A lot of these Western nations are built on Judeo-Christian kind of morals and values. Well, I have no, like, don't get me wrong, and I want to be clear that like, I have no issue with other religions. I wouldn't classify myself as a racist. I think that you've got all of these other religions that have very different values. And when you bring them under the same roof, there's a lot of infighting. It's what we're seeing in the UK right now. It's what we're seeing in many areas of Canada. It's what we're seeing in many areas of the States. And so I tend to think about it from the perspective, like when we think about culture, each of these countries has such an amazing, unique culture. Preserve that culture instead of trying to mix everyone underneath one roof. And then you end up degrading that culture. And so I just tend to think the immigration, open border policies right now to kind of take into account this deflationary shock that we're facing in terms of population demographic shock we're facing. I think we're going to put a lot of pressure on our financial system, a lot of pressure on the welfare system. And in the end, I think that it's going to do the opposite of what we expect it to do. And we're also seeing just to kind of like, I find some interesting statistics is like looking at China. Like China, because of their one-child policy, have basically come out and said that they expect by 2050 the population to halve. And I'm just like, that is mind-blowing. Like China's going to be slammed if that's the case. And so we're going to have this like aging population with very little amounts of kind of teenagers, kids coming into this world. And I think we're going to have a working population that's going to have to support this aging population. It's not going to look pretty.
Oh my gosh, Seb, unbelievable. What we'll have to do it again. We'll have to expand on some of those things going in, because that is, I mean, that's the future. I know it's tough because, you know, current events trump future trends. And again, I know you as someone that thinks and zooms out and thinks longer term. I know I do myself. It's hard at times because, and I feel like a lot of Bitcoiners tend to be like this. You live in this current event driven world. Again, a lot of it fiat based, and fiat drives that, where it's just click captions, headlines, what is it, clickbait this, whatever, and just headline reading. So it's very tough for the people that are trying to zoom out and think from 100,000 feet. So I just appreciate you coming on, writing the books, which everyone's got to go check out, BS for Bitcoin and the Hidden Cost of Money. We'll link to these phenomenal books. What else are you working on right now? I know you said you're writing some stuff. So is that another book? Like what do you have? What is the future in the coming months, next year or two look like for Seb?
I would say, like, people can always find me on my blog, just sebbunny.com, and Bunny is Bunney. I have a blog called The Chi of Self-Sovereignty, kind of like our life force energy of how to be self-sovereign. I used to write weekly a couple years back, and then I realized I was like, you know what? I want to write when something inspires me, when something like really hits home, because I feel like I'm just a better writer when I'm writing from a place of inspiration as opposed to a place of being forced to write because I want to be consistent. And so I don't really post too much on there these days, maybe once every month, 2 months. But I can promise you that it comes from a much deeper place when I do write. And so people can kind of find me on there. At the moment, there's one little, I've been working on a little project, a little kind of app of sorts. And I'll talk more about that kind of in the future. But in essence, I'm just blown away with technology these days in the world of vibe coding. And you can bring stuff into reality and rapid prototype things. And I'm absolutely in awe. Like previously, what would have taken a technical officer, a few developers, a product officer, organizing all this stuff. If you've got an idea, you can bring these things into fruition rapidly. And so I'm working on a little project right now that I'll kind of hopefully release in the coming months, which would be fun to release. But outside of that, I would say, I'm kind of just like head down, day to day. I kind of spend a lot of time walking through the forest, consuming a lot of content, trying to understand the world from like a bigger perspective. Because as you say, like it's easy to get caught up in the noise, and the noise doesn't necessarily represent what's actually taking place. I think it just tends to represent the human emotions and the fears that are going on in society at any given time. So I always just try to step back and I read a lot of books because I think there's a lot higher signal to kind of noise ratio in a book.
Amazing. Mr. Seb Bunny. Again, check these out. The Hidden Cost of Money, BS for Bitcoin, amazing books. We'll link to them below. Co-founder of Looking Glass Education. You've been doing great work for years. Thank you, sir. Thank you for joining us today and sharing your wisdom.
Thanks a lot, Brandon. And the one final thing I'll just say is, like, if people can't afford any of this content, like the BS for Bitcoin or the Hidden Cost of Money, I never want price to be a barrier to learning. So feel free to reach out if you can't afford it, and I'll send you the ebook for free. I just think that ultimately, as Elon Musk once said in like a speech, he was basically just like, we are on a ship that is sinking. And if I'm the only person that has the patent to a bucket, am I going to keep that bucket for myself, or am I just going to share it with everyone else? And so I think that I'm always pro sharing information so that people can understand what's happening in this world today.
It's amazing. Amazing stuff. Thanks, brother.
Thanks.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.